Mm. Hey, Mikey T's here. Way to go. Brandon! We were just talking about you tonight, Mr. Brandon. And Dennis Mancini. Mancini. All right, let's see if I can change this around here a little bit. Right there. Here we go. Oh, good. Look good. Look good. Look good. Alpha. Shannon. Walt. Walt Diesel. Wait a minute. What? Yeah, Walt Diesel Jr. John, Mark, Cool Beans, Cool Beans. Brandon, what's up, boss? Not much. Mark Dunn. Ulyss Gibreth. Okay. Digital Unknown. Dog Iron Skull. Interesting. Matt. Sweetie Swag's here. Woohoo! Sweetie Swag's in the house. Mikey G's here. Way to go, Mikey G. Neo Shop. What's happening? Mikey T Justice. Good evening. What's the YouTube with your screen? What's the YouTube with? Oh, that is the 10-minute trader. G wants to look at SoFi. SoFi said no. Antonio Pasco. Pasucci. Okay, good evening. I like Texas Instruments. Ooh, Texas Instruments. Isn't that TXN? TXN. TXN. There it is. Oops, here we go. So, Texas Instruments. Let's get rid of this thing. I don't need that. Let's change this. Go to there. There we go. Texas Instruments. First one on the list. Hey, Texas Instruments, there's the high, 215. Here's the low, way over here at 140. Look at that movement. Nice. That's where it was. This is where it is. That's the direction it's going. Cool beans. Let's move this over a little bit. Okay, we can see it now. Nope, not yet. Not quite. There we go. Now I can see it. How high are transaction costs? Oh, Cassie, it always depends on which platform you're using. I use Thinkorswim, which is through Charles Schwab. Sweetie Swag, or can you buy ahead of time like Sunday and have it filled on Monday morning? Well, they call that, yeah, you can set up your orders tonight and have them filled tomorrow. That is possible. Scroll up. Uh-oh. Sweetie Swag. All right, Sweetie Swag, I'm not seeing questions here. Yeah, it says Sweetie's in the house. That's it. Nothing other than that. Okay. All right, so let's take a look at Texas Instruments. You answered, yeah, okay. Get on with it, please. Oh my goodness. What are you looking at on Friday? We'll see if the contract sold. Okay. Intel, INTC. Hold on a second. INTC. All right, let's get rolling. I'm doing fine. Thank you for that, Queeno. You're looking for Friday, blah, blah, blah. If the contract doesn't sell, do you create a new one on Monday? Absolutely. Let's take a look at Texas Instruments. Texas Instruments was first on the list for today. 198. So we're looking at the 200s. The 200s going for 445. Sweet. I like that idea. Where do you get the announcement date, expectation date, and the payment date? Cassie, come right over here to the Market Watch. Okay. On the Market Watch, come down to the calendar. Okay. The calendar gives you the EX dates of whatever stocks you have on your list at the time. You just click on any one, and down at the bottom, you have the dividend amount, the dividend announcement, the EX date, date of record, and payment date, and so on and so forth. All the information is down here at the bottom of the calendar when you click on that. I meant expiration. The dividend. Oh, the expiration of the options. Well, they're right here on the option chain. 25 October. Well, that's this Friday. 1 November. That's next Friday. 8 November. That's the Friday after. It's one after another, after another, after another. Simone Pfizer. Hold on, Simone. PFE. Okay, we got a lot to look at, and you guys just keep throwing more at me. Okay, let's keep on rolling. Uncle Billy. Uncle Billy came and left. All right. Here's Texas Instruments. First thing I want to take a look at is a year ago we're at 149. The bottom of the year was 138.99, and then she jumps on up. Here's the top right here on the end of August, and that was 214. Guidance wants to take a look at ExxonMobil and Costco. Uncle Billy, I tend to be quiet. At least that's what she tells me. ExxonMobil. And what was that other one? Costco. I don't do Costco. It's too overpriced, in my humble opinion. All right, let's keep on. Let's keep focused with what we're looking at the moment. What kind of capital you recommend? I can't recommend anything. Okay, so you have to figure out what is right for you. Holy bad guys. If your position is down a lot, what strike price do you sell at? Initial price or closer to the current price? Could you do an example? Awesome. Yes. As soon as the stock drops, I'll show you because I actually have a couple of those where I bought them and then the stock dropped. Yeah, and then I lower my strike prices. But you always got to keep an eye on them because if you don't keep your eye on them, they could get away from you. NeoShop, how deep into financials do you dive beyond earnings and dividends? Okay, look at it this way, Neo. If a company is consistently profitable, I mean consistently profitable year after year after year after year, there's the stocks that I look at have been around for about 50 to 100 years. Those are the only ones I look at because they have historical performance. They have proven themselves. Okay, so unless they get kicked off of the Dividend Kings list, the Dividend Champions list, or whatever list, I don't tend to consistently watch the financials. If they keep increasing their dividends, it means they keep being profitable. That's basically about it. Okay. All right. So here we are, Texas Instruments. Unfortunately, the last 30 days for Texas Instruments has this thing going in a downward slant. So if you really like Texas Instruments, keep your eye on where the bottom is because she keeps going down. As soon as the bottom shows itself like, hey, here I am, it's going to turn around and go back up. So I'm going to write Texas Instruments for the next couple of weeks, for next week, TXN, because as you can see where it is, it can find the bottom any day now. You invest? No, I don't do any coins at all. Sorry. Thank you. You're welcome. Blah, blah, blah. Kyle became the number 8 member of the team. Okay, cool beans. All right, let's keep on going. So Texas Instruments going to be no. Next on the list from last night, General Motors, because we finished up with General Motors and Harley Davidson. GM is going to be a no. Look at that movement. Isn't it pretty? Down, up, down, up. I mean, right now she's topping off here. More than likely she's going to start coming down. So GM will be great for not next week, but the week after. I want to thank you for these free classes every night. I've really learned and continue learning. BTA, cool beans. 2B, okay, wait a minute. GM. So I'm going to look at GM in about 2 weeks because look at where she is. And she usually takes about a week, week and a half to find the bottom. Look, from the high here, it took about 2 weeks to find the bottom. From the high here, it took about 2 weeks to find the bottom. So it's not guaranteed. It's never, ever guaranteed. But if you take a look, there seems to be patterns. Where it goes up, great, start your profit taking. When she drops, that's when you start buying. When she goes up, that's when you start selling. When she drops, that's where you start buying. When she goes up, that's where you start selling. It's actually that simple. Do you remember the teeter-totter or the seesaw? Up, down, up, down. Well, that's all stocks do. They go up and they go down. So if you watch them every day, what we do here, Paul, the morning trading group is amazing. Everyone should. Thanks, Paul. Paul, now I am going to make a limit at some point. At some point, I'm going to say no more people in the morning trading group because I don't want to be bogged down, and I want everybody to get a fair amount of time and to be able to ask questions. So I am going to cap it off at some point. So, because I don't want too many people there. All right, that being said, let's keep going. So General Motors is going to be a no for this week. Harley Davidson, which, by the way, I do have some. Hi from here, too. Hey, Dennis Mancini, were you jumping around? Okay, so Harley Davidson, HOG. HOG. Mr. Wiggles on dark pools. I haven't really looked into them because I come from an age. Okay, I was born in the '60s, grew up in the '70s, the '80s, and '90s. We have an old saying: "If it ain't broke, don't fix it." Okay, it's been working for me perfectly fine for 15 years. I have a tendency to just leave things alone. Kerry, try not to do that until the next July. I hope to be retired by then. Kerry, we'll see what happens. All right, so Harley Davidson. Now, I do own some Harley Davidson. I feel compelled to let you know that. Here's the high, here's the low. She went up, across. Now we're sitting here in a nice little channel. Look at this. See, she's 34 last year. Well, she's 34, 35 this year. Okay, basically the same. What we want to do is we want to buy it when it's low. She goes up, that's when we want to sell. When it drops down, buy. When it goes up, sell, buy, sell, so on and so forth. I like the movements as they are predictable. Okay, so let's do Harley Davidson. Why not? All right, we're looking at Harley Davidson at the moment. Here's the high, here's the low, here's where it was, here's where it is, and here's the direction. Look, up, down, sideways. Okay, well, she's sitting at 36.23 at the moment. Let's take a look at the numbers. I could buy it at 36.33 tomorrow morning. Well, what are the 36s going for? $1.55. Well, I'm losing 33 cents. So I take my 33 cents off of this. Now I'm getting a $1.22. How can you say no? That's 3%. That's a 3%. I'm going to write that one down and circle it. HOG. That's a nice 3% trade. I like Harley Davidson. And just to let you know, in case you're curious, if these numbers look like this first thing in the morning, yep, I'm buying some. Oh boy. All right, so let's continue. Harley Davidson a year ago, $29.98. We bottomed out at $25.47. Topped out at $44.12. The last 30 days, right there. Check that out. She went sideways for a bit. Here's the top right here at $40. She drops down to 33. That's a $7 drop. That's a big drop. So now we're back up to 37. Now from 33 to 37 is a $4 move. $4 is 11% move. Okay, some people might take it. I don't know. Is it going to come down or is it going to go up? So the question you need to ask yourself, is, do I like Harley Davidson? Do I like Harley Davidson at this current price? Am I willing to hold on to it as long as I have to make my profits? Well, they consistently make the dividends. Okay, that's great. But I'm looking for cash flow. I want to buy the stock, grab a premium, and be back out again. I want to be in and out. Thank you very much. I'm just visiting. Paul, are the option trade numbers from Friday or updated? No, those are from Friday. Okay, they don't update until 9 o'clock tomorrow morning. Sweetie Swag, how do you get a split view? Oh, you have your setup. You see the vertical line right here? Halfway through the vertical line, there's a little arrow right there, smack dab in the middle. You click on that, and it goes either one way or the other. Okay, you ready? Hold 1 second. You see the little arrow? I click on that arrow. Boom, it's gone. Now it's arrows all the way over to the right. All the way to the left. Click on it again. There it goes. And then you can bring your cursor right onto the line, and you can drag it either way you want. Okay, I love Thinkorswim. There's a lot of interactive in there. Okay, have you read Margin of Safety? If so, what was your biggest takeaway? Mr. Wiggles, I'm not 100% sure what you mean by have I read Margin of Safety. I have no idea what that means. With the chart on the left pane. I got that one. Dollar is out, Mr. Nice, thank you. Something I didn't already know. How do I feel about Tesla? I would really, really be happy if Tesla started sharing some of its profits, but it don't. I can't see the chart on the left. Oh, wow. Am I over too far? No, that's as far as it goes. To the left. Okay, anyway. La 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 la. All right. Hey, Bama Redneck. Bama Redneck wants to be a. Uh-oh. Don't. Okay, Bama Redneck wants to be a moderator. Okay, there you go. Pin customized perks. Okay. All right. Apartment. Okay. Really go. There you go. So, Bama Redneck, you are officially a moderator. So, if someone's not being nice, you can boot them off. Okay. Bitto. I don't do Bitto. I tried it earlier at the beginning of the year, and it was kind of like a disaster. Okay. It didn't fit in what I'm doing here. Okay. I like a simple, safe, predictable, consistent 1% per week. Bitto is a little bit of a challenge. Johnson & Johnson, Dennis, I'll write it down, see if we can get to it. I'd really like to go over the list of the stocks I picked up from 2 weeks ago that are coming up for consideration this week. All right, Harley Davidson. Let's quickly do a quick trade. Somebody wanted to see how this is done. Now, I like it at the 36s. Okay, so we're going to go to covered stock. And we're going to buy the 36s. There they are right there. Let's do 100 shares at the market. Confirm and send. Then you read it out loud. Always, always, always read the order out loud before you send it off, because most people are going to lose money at first by hitting the wrong button. I do it plenty of times, and I've been trading for over 20 years. I do press the wrong button once in a while. Buy one covered call on HOG, H-O-G, which is Harley Davidson. It's weekly, 25 October 24. That is next Friday. Okay. Next Friday, the 36 call against the stock. Remember, the stock right now is at 36.33. So I want to do the 36s against the 36.33 stock position at the moment. My break even is 34.63. Well, as long as the stock is 34.63 or higher, I'm in a profit situation. Okay, that's my break even, 34.64. 63. Okay, it's a maximum profit I'm making off of this one particular trade, $137 for one contract. Now, when I say safe, predictable, and consistent, well, it's telling me exactly what I'm making before I even do it. So the questions, does it make sense? That's number one. Do I like Harley Davidson? That's number two. Do I like Harley Davidson at this current price? Am I willing to hold on to it for however long it takes me to make my profit and get on out? Remember, Harley Davidson has 4 dividends every single year, and they keep going up. Paul wants to take a look at the seasonality. We'll look at that in a second. Hold that thought. Okay, so I'm going to bring up my calculator. Okay, my profit on this trade is 137. Now, to find out what your rate of return is, you take your profit, the 137, and you divide it by the cost of trade, including the commission, 3,463. 3,463. It comes to a grand total of 3.9% for 1 week. Now, remember, I don't want to hold on to it for a long time, but I'm willing to, because it's Harley Davidson. Okay? I'm willing to hold on to it, but I don't want to. I want to jump in. I want to get my little 3.4%. I'm going to buy it at 36.33, and then I'm going to sell it at 36. Well, how can I make 3.9%? That's almost 4% if I'm selling it for less than I paid for it. Well, because the premium I'm collecting is higher. Get out of that. Well, let's get out of this. Let's get out of this. Back to where I started. Okay. See, I'm buying it at 36.33. I'm selling the 36 covered call for next Friday, and it's currently at 155 per share. Okay, well, you do all the fancy little math, and I'm still getting about a 4% return. I'm buying it 36.33. I'm selling it at 36. And the only thing the stock needs to do is stay above 36. That's all. And what if it doesn't? It's Harley Davidson. They've been around for over 100 years. Why do I really care? It's a good company. They consistently increase their dividends. You can't go anywhere without seeing a Harley somewhere. Anyway, let's keep on rolling. Now, somebody wanted to take a look at the seasonality for Harley Davidson. Okay, what is seasonality? Well, basically, that's how does a stock normally move from year to year. Now, far left is January 1st. Far right is December 31st. This is a whole year chart. The blue line is this year's movement. The blue dot right here is Friday. That was the last trade right there. Now the red line is 10 years worth of historic pricing. Well, what does the stock normally do this time of year? Well, look at it right here in the fourth quarter. She goes right up to the beginning of December, end of November. Well, I have no problem whatsoever jumping in and getting out there. Look at that movement. How can you say no to that? Okay, there's a couple of things going in our favor. Name recognition. Everybody knows who Harley Davidson. It's been around for over 100 years. Awesome. Okay. They consistently increase their dividends. They're in a current uptrend. Okay. I'm only looking to jump in, get my profit, and then jump back out again. But if I have to, I will hold on to Harley Davidson until it hits my target price. And I will sell a covered call every single week in order to get that cash flow that I so wonderfully desire. Okay. So that being said, let's keep on keeping on. Let's go to the next one. Let's get out of here. Let's get back over to here. Intel is next. Somebody want to take a look at Intel. INTC. INTC. Here we go. Intel looks interesting enough. I always want to take a quick glance at the chart. Okay, so let's hit another video. Intel. All right. Okay, we're going to take a quick look at Intel, INTC. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at the direction. She goes up, comes down, goes sideways, comes down, goes sideways, comes down, goes sideways. We're sitting at 22.77 at the moment. So the 23s are going for 40 cents. Okay. Now, if it hits 23, I'm going to collect an additional 25 cents, the difference between the purchase price and the strike price that I'm selling. Or I could buy it at 22.75 and sell the 22.50s. Well, let's take a look at what the 22.50s are going to look like. It's a quick little exercise. It's either going to be a good one or a bad one. What are we looking at? Uh-oh, I miss sorry, on my screen. It's funny. Look, it's a book by, yeah, sorry. Unless it is a audio book, no thank you. I get so many books to read, there's just not enough hours in the day. Rude dude, what's happening? I'm new from African Nigeria. I will love to start this, sir. Kindly help. Well, Sumex, how are you today? Glad you're here. Okay. Osama, Coinbase puts. More power to you, that one, brother. Mr. Nice, any stocks are dollar denomination. Okay. NeoShop. I was coached a few years ago on 3 hump up downs. Have you seen such trends? I don't pay attention to that. Sorry. I like Neo. Now, I understand there are a lot of trading strategies. There are a lot of indicators. There are a lot of keep your eye on this pattern recognition. Yeah, I understand all that. But remember where this whole strategy came from. It came from my 9-year-old daughter jumping up on my lap and saying, Daddy, can you teach me what you're doing? Well, great. Well, here's the challenge with trying to teach a 9-year-old how to trade stocks. Number one, I had to make it entertaining. Okay, had to be fun. You've seen some of the videos. I'm going to show it to you in a second. But mainly, simple, safe, predictable, consistent, no way to lose. Now, we all know what happens if a 9-year-old starts losing money. She's going to cry. I'm going to feel like shit. Mama gets involved. I'm sleeping on the couch. I lose no matter which way you look at it. So it's very important. Simple, safe, predictable, consistent, no way to lose. 5 rules. Never buy something you don't want to own long term. If you don't understand it, don't buy it. It's that simple. If you don't want to buy it and hold on to it for however long it takes to get your target, don't buy it. Number 2, never sell at a loss. It defeats the purpose of the game. Really, it does. Why buy something and sell it for a loss? If you can throw money down, throw money away, flush it down the toilet. It's more entertaining. 3, make sure the company is consistently profitable. It always, always, always boggles my mind why people put their hard-earned money into companies that are not consistently profitable. There's 9,714 companies as of last Wednesday. If the company is consistently profitable, great. Are they sharing their profits? Great. Those are the only ones I want to look at. And there's only about 300 of them that have 20 years of increased profits. And rule number 4, weekly options. I want a weekly cash flow. The only way I can get it is from companies that offer weekly options. October 24th, that's this Friday. 1 November, that's next Friday. 8 November, that's 2 Fridays away. 15 November, 3 Fridays away. 22 November, 4 Fridays away. So on and so forth. Every single Friday, an option expires. So I want to jump in and I want to do weekly options. Now, 80% of all options expire worthless. So why do you want to buy them? You're in the minority. Only 20% of them actually have profits to them. So why buy them? I want to be a seller. I want to be on the 80% side. Anyway, rule number 5, make sure the numbers work. What do I mean by that? Well, what's the current price? What am I buying it for? What can I sell a covered call? And now a covered call is one of the safest strategies there is. There's hundreds of videos available on YouTube. What's a covered call? How can I profit from a covered call? What's the parameters of a covered call? So much information. Now, what can I buy it for? What covered call can I sell? What premium am I collecting? Is that over 1%? Because that's my goal, 1% per week. Now, I go over to the chart because the chart is going to tell me, is it the right time? Well, I don't want to buy at the high of the year. It doesn't make any sense. Who buys high and waits for it to go higher? I don't know. Buy low? No, because you don't know how low it's going to go. I like to find the bottom, have it turn around and start going back up again. It is a clear sign. There's 5 things I want to look at anytime I look at a chart. High, low, where was it, where is it, and what direction? Up, down, sideways. Really that simple. Now I want to look at 5 charts. I like the number 5 for some strange reason. I want to look at the 1-year chart. I want to look at the 90-day chart. I want to look at the 30-day chart, and I want to look at the seasonality chart. Okay? Those are the charts I want to look at. Was that 5? That's only 4. There's got to be another one in there somewhere. I don't know. Anyway, let's keep progressing. That's basically what I want to do. If everything looks good, great. Well, right now, 22.75 to 22.50 is going for 66 cents. Well, that's more than 1%. Well, let's find out exactly what it is. And how do we do that? Before we do that, we look at the chart. A year ago, 35.64, topped out at the end of the year, 51.21. Well, here's the bottom right here. The bottom, which was on the 10th of September, that was 18.51. Now, from there, she goes up, down, up, down, up. How could you ask for anything more clearer than that? So let's go zoom in a little closer. Okay, the last 30 days, here we go. Look, 30 days ago was the 30-day bottom, right down here at 20 bucks. It shoots up to 24.60, drops down to 21.50, back up, back down. Now, 2 days to the upside. I love a 30-day bottom. 2 days to the upside, that's where I jump in. Then you have another bottom, 2 days to the upside would be, yep, I wouldn't have gotten in that time. But down here, okay, 1, 2, look at it. Wednesday was a bottom, Thursday and Friday were both up. Great, I'll be jumping into this one. Let's take a look at the numbers. So let's get rid of this. Let's move on over to covered call. Let's do the 2250s right there. Now I'm just going to do 100 shares because some people get freaked out when I do 1,000. I like to do market orders. Now the reason why I like to do a market order when I'm buying, because I'm buying the stock and I'm selling the option. The stock and the option are intertwined together when I buy them. So I want to buy them at the market so they fill first thing in the morning. Because first thing on a Monday morning is the most or the maximum amount of time on a weekly option because it goes Monday to Friday. So Monday morning at 9:31, okay, that's when I jump in. When I jump out is usually right around 3:30, 3:45, because that's the maximum amount of time I want to play with. So here's the order right here. Buy one covered call Intel 25 October 24. That's next Friday. The 22.5 call strike against Intel at the market to open. Okay, the break even is 22.08. Well, it's currently at 22.75. Okay, anything above 22.08 is going to be a profit. I'm going to make 41 bucks off of this trade, and it's going to cost 2,200 bucks. Let's get the calculator. Oh, calculator. Why do I keep closing up the calculator? 41.50 is the profit on this particular trade. I want to divide it by the purchase price, 22.09, and that gives me a rate of return of 1.87. That's almost 2%. And it's Intel. I like Intel. I grew up in the 70s and 80s. I seen Intel come from nothing and go to what it is today. So I have no problem jumping into Intel. Let's get back to where we were and let's take a look at some new stuff. All right, what else do we have? I was coach. Yep, I saw that one. Gotcha. You got it, Mr. Wiggles. I don't do. Yep, thank you for that. Uh-oh. What did I miss? I feel you. Good, good, good. Okay, Anonymous. I am a dividend investor just making $5,000 a year. Okay, Anonymous, that doesn't help me out because you're saying you're making $5,000. Great. Are you making $5,000 off of 50 grand, or are you making $5,000 off of 5 million? Okay, I don't like numbers like that. I like percentages because we all do not have millions of dollars. We all have a certain amount to play with, and whatever that certain amount is, come on. Okay, sorry, I'm recording a lot of this stuff for my other channel. Yes, I do have 2 channels now. Okay, one is Dividend Stock Talk. The other one is the 10-minute trader. Okay, totally separate. All right, so as I was saying, what the hell was I saying? Oh, yeah, so the $5,000 you make a year, great, wonderful. What are you using to make that? Are you using 100 grand? Well, that's only 5%. Are you using 50 grand? Well, that's 10%. Are you using 5 million? Well, that's only 1%. Okay, do you see where I'm coming from? All right. Good evening, sir. Second coming. How are you today? Jonathan. Hi, James. You covered Macy's on Friday. Can you repeat it for me? I'll write it down and we'll take a gander at it. I actually have some Macy's. Okay. Esta, Up, and Comer. I have no idea what that means. E-Man, if you need to talk to him, he will not send you a message. Yeah, I won't. If you want to talk to me, seriously, if you want to talk to me, send me your phone number. I will give you a call. And you can actually post down here in the comments. Does he really call? Seriously, try it. Try it. I'm going to challenge. See who actually does this. Right? Does he really call if I leave my number? Write that down. See who answers you. Hey, look at this. Hollywood's in the house. Abby, huh, Dennis? ABBV. ABV. We'll take a look at it. All right. Hollywood, what are you up to today? Yep. Paul says I really do call. He's the only one who did it, huh? All right. SMX. Listen every night, 9 p.m. to 11. Yep. All right. Fox Vendetta. Jay, it looks like all trends are heading down. All righty. Which stock are you showing now? That was Intel. Eric, asteroid not Sure, asteroid, nope. Intel, okay. Coolio, all right. I don't like Intel. Sorry, dude. Forest, Tesla. Tesla does not have dividends, so that's a no. CEG, what the heck is CEG? CEG. UPS, Stacy. Stacy, how are you today? UPS. Uh-oh, got a big question here. Addison Strickland, I understand it's a vague question, but it'd be helpful for any advice. I'm 21, cool beans. I'm interested in stock market. First thing I should know to do is what? In my opinion, the very first thing you need to do is change your mentality, change your thinking, because you're going to have everyone and anyone telling you what to do, what to think, what to buy. That's number one. You have to. Oh, Andy Panda, back again. How are you today? You're going to have to get in your own mindset because investing for weekly cash flow, for a weekly return, is unheard of. Nobody's ever done it before. Nobody's ever said, hey, I want to buy and I want to do weekly returns. You look on the internet and you find out who does that on a consistent basis. Almost nobody. Everybody always says, well, what's your annual percentage rate? No, that does nothing for me whatsoever. Okay. My bills, I only have two bills that come due once a year. That's my property taxes. And that is my, what's that other one? My insurance bill. Okay. Those are the only two bills I have that come due once a year. Everything else is either monthly or weekly. Okay. So how can you live just getting a check once a year? Yeah, it doesn't work for me. So I hope that's helpful for you. Humana, HUM, Forest. HUM. I haven't done Humana in a long time. Interesting. Here's the high, here's the low, here's where it was. Look, down, sideways, drop, bottomed out right here. Now she's bouncing off that bottom. Oh, I got a question on YouTube. They don't pop up very long. They pop up and they disappear. What question was it? Thanks, cool beans. What screen on Thinkorswim are you showing? Big Von, the screen? Well, this is quick charts here. This is quick charts. And over here is the actual trading. Okay. Top part of the trading is the stock information. Bottom part of the trading is the option chain. Okay, so quickly, Humana. Look at that top 6 times. 6 times it would not bust through 527. Now, I don't trade this stock only because it's out of my price range. So whatever money you think I have, yeah, I don't do $500 stocks. I say 250 and below. Okay. Okay. The next stage in my life is moving up to the $300 or $400 stock. But until then, 250 or below. Okay. I'm not as rich as you think I am. But here we go. 6 times it would not bust past 527. She drops down the trading range of, look at this, between 320 and 375. It just went sideways for, what is that? 1, 2, 3, 4, 5, 6, 7, 8, 9 months before she drops, finds the bottom in October. Let's zoom into that, see what that looks like. Okay, she drops from the 320 area, finds the bottom at 213. Now, I don't know about you, but going from 525 to 213, that's going to hurt. Big Von, you like that? That's going to hurt. Think about it. 527 last year, and now the bottom, 220. Hell no. All right, so currently at 267. Look, she's bouncing up and going to the upside. Well, that's a good indication because you can't get any lower than the low of the year. And that's where it was 3 weeks ago. Okay, if you like Humana. Now, I personally don't trade Humana. It's out of my price range, but it is what it is. So who said this? Guidance says, yep, I call. And then someone over on YouTube said I call. That's it? Just 2 of you guys? Now, Bama Redneck, you know I call. I actually called and talked to you. 86, you know I called to talk to you too. All right, anyway, let's keep on going. Is that all the questions? Nope. All right. HCA. What the heck is HCA? Now, you know, if I'm saying it in that manner, it's probably going to be a no. and it is a no. The reason why HCA is a no, what about Nike? We'll take a look at Nike. HCA is a monthly optionable stock. Okay, when I say rule number 4, make sure the company has weekly options. Okay, Raul, yep, I called Raul. Awesome dude, he helped me so much in my trading journey. Yeah, buddy, Hollywood. Thanks, Hollywood. Okay, so I don't like monthlies, and here's the reason why. Okay, if I'm going to trade a monthly, right now it's at 455. Okay, at 455, it's not even freaking showing. 455, still not showing. Okay, so currently HCA 455. Where is it? Right here. $3.40. That's not even 1%. And I got to hold it for a whole month? Yeah. Covered calls on this company here, not even 1% for a month. That's less than 12% a year. What are the rest of the rules? Okay, Addison, there's only 5 rules. Number one, never buy something you don't understand. Number 2, never sell for a loss. Number 3, make sure the company is consistently profitable. Number 4, weekly options are a must because monthlies aren't worth my time. You guys can pick whatever you want to do. If you like HCA, fine, you buy it. I'm not going to because look at it. It's at $4.55 now. The $4.55 is paying $3.40. That's less than 1%. And I got to hold it for 4 weeks. Where are we? Hold on a second. Okay. Here is 30 days here. That's 4 weeks. Great. Now tell me where the hell it's going to be in 4 weeks from today. Look, she went sideways, down, then up. You honestly think it's going to continue to go for 4 weeks? More power to you. Okay, I don't like monthlies, and I don't know why you guys don't understand that. Joshua, how you doing? Okay, monthlies just don't work. Rule number 5, make sure the numbers work. I just went through that one. I don't like monthlies because they don't work. Weekly options only for me. You guys have to figure out what rules work best for you. Okay? That's a no, Joshua. That's right. That's a no. Another one, what the hell are you thinking? Seriously, this is your money. You invest your money however, wherever you want. That makes sense. You appreciate it. It does make sense. Think about it. It's your money. At some point in time, you are going to retire, whether you like it or not. There's only 3 ways out of this. You're going to retire. You're going to age out. It means you're going to get too old to go to work. Aging out. Number 2, you're going to walk out. You're going to have enough money coming in on a monthly basis from your investments. You can tell your job, your boss, you can take, who can sing with me? You can take this job and shove it. I ain't working here no more. And then third, you're going to toe tag out. You have any idea how many people toe tag out? Okay, my best friend, he was one of the best men at my wedding. He toe tagged out. He died on his way to work. His brother, who was younger than him, he died on his way to work. Okay, more people are going to die on the way to work than no. Okay, you age out, you walk out, or you toe tag out, one or the other. Cool beans, Joshua. All right, thoughts on IWM. Doing some OTM credit out spreads, maybe a week out, short 221 put, long 220 put. Cool. Now, let me tell you this. I can't even pronounce that name. QYTXU. Zytexu? I don't know. Anyway, I don't do those. No, I do those strategies, but not here. Okay, please understand. Here is what I call an introductory course. It's simple, it's safe, it's predictable, it's consistent, and if you do it right, there's no way to lose. It was created for my 9-year-old. Now, if you do it right, you get 50% or more per year. And if that's not enough to entice you, then what you're doing, the shorts, yeah, great. Great opportunity to make a lot of money. Also, a great opportunity to lose money because 80% of all options expire worthless. I'm not saying don't do it. I'm saying I don't teach it here. I do teach it in the morning trading group if somebody wants to do it. But most of the people in the morning trading group, they want to stick to the 50% per year stuff. Joshua, that's a no. What the hell are you thinking? All right. Anyway, HCA lays their employee off all the time. Okay. Now, Andrea, I wouldn't do it. Okay. Now, two reasons. Number one, it's over $250. That's a no. Number two, it's a monthly. That's a no. Okay. I'm pretty steadfast in my choices. All right. Da-da-da. The Texan Bull. Nice to see you back again. Do you avoid stocks with earnings reports due soon? Earnings could move the stock a lot. Thoughts? Hold that second. Do you wear glasses? Yes, I wear glasses for seeing far away. When I was 17 years old, I got a nail stuck in my left eye. So that's why you see that eye there, not always focusing, or me closing it every once in a while. Okay. But glasses, yeah, I'd have to stand way back here to be able to read it. And then I have to come all the way up here, take the glasses. It's just a pain in the ass, you know. I checked out LASIK surgery, and they said they won't do it because they won't do just one eye, because that's the only eye I got to work with. You can call me Cyclops if you want. Nobody's ever done that, but you know, it is what it is. All right, so the Texan Bull, do I avoid earnings? Yes, I do. I don't even pay attention to them. Okay, the reason being I don't pay attention to earnings, number one, I've seen positive earnings where stocks go down. I've seen negative earnings where stocks go up. So to me, they really don't matter that much. And another thing that I've been seeing a lot lately is that the market maker over exaggerates the importance of the news. Okay, so we've seen stocks drop really huge just because of the earnings. And the earnings really don't have a whole heck of a lot to do with the day-to-day operation of the company. So when the earnings go down, okay, here's a question for you. If you work at a company and the earnings go down, does a CEO or somebody call you up and say, hey, Texan Bull, yeah, take a couple of days off. Our earnings are down. We need to, tighten up. No, it doesn't happen that way. People who work go 9 to 5. They put their 40 hours a week, regardless of what happens with the earnings. Anyway, let's keep on going. LMT. Okay, what the heck is LMT? All right, whatever. 611. I'm just going to bypass this one and say hell no for two reasons. Number one, it's over $250. Not in my gameplay. All right, and it's at the high of the year. Double no. Yeah, no, thank you. LMT earnings expectations. Hollywood. He's not doing long term, sir. I do cash flow, 1% a week. Thank you there, Hollywood. Stacy, what program do you use? Stacy, this is not a program. Okay, this is a trading platform. So if you use E-Trade, Fidelity, Interactive Brokers, Robinhood, Acorn, Webull, this is just a trading platform where I buy and sell. Big Von, where do you find a list of qualified dividend stocks that offer weekly options? Now, Big Von, I'm a little curious. Where do you get the impression that companies pay weekly dividends? Okay, I've never seen one. The closest I've ever seen are monthly dividends. Now, I like companies that have weekly options. Huge difference. Weekly options and weekly dividends. Two totally different things. Nobody has weekly dividends as far as I know. Do you have a CFA, a certified financial advisor? Hell no. Okay. If you have a good one, let me know. I'm sure people in the group would like to hear it. What are my thoughts on Pfizer? We're going to look at that in a little bit. I have a few more questions to go through pretty soon. Could you go through how to buy the stock and how that works? Well, that's a good question. Briz. Hold on to Briz. Pickled peanuts, back again. Cool beans. Big Von, not a big deal. Don't worry about it. A lot of people, you'd be amazed how many people ask me what companies pay weekly dividends. Nobody. They're weekly options. Okay, you can go to the CBOE, the Chicago Board of Options Exchange. They'll tell you every single stock, every single ETF, every single indice that actually has weekly options on them. Andrea wants to take a look at Apache. What company you use? I use Charles Schwab, and I also have a couple accounts at Robinhood. I have 6 accounts altogether. Okay, I share 3 of them with you good people. Okay, the other 3, yeah, no, I don't share those. I'm a nice person up to a certain point. Yo, Cyclops, Hollywood, that's funny. Kasif, hello, how are you? Kashif, is that right? Kashif Ali? What about AFRM? What the heck is AFRM? AFRM. Affirm Holdings. Interesting. Now, I'm not familiar with Affirm Holdings. So let's take a look at AFRM. I like using Yahoo Finance. I tried. Uh-oh. Okay. Okay, so this is why I've never heard of it. There are no dividends in the selected time period. So let me ask you a quick question. Okay. Alan Hustles. Alan, if you show up to a live show that says dividend investing for weekly cash flow, why would you ask me about a stock that doesn't have dividends? This is Yahoo Finance. Yahoo Finance says there are no dividends in the selected time period. No dividends, no thank you. All right, so let's get out of that. What do we have next? Monthly dividend facts, all right. But your title is dividend stocks. Oh, actually, it should say dividend stock talk. Dividend stock talk is the title, and in the description, it's investing in dividend stocks for weekly cash flow. Monthly dividend, FAX. What the heck is FAX? FAX. Never heard of it. And it has no options. I'm going to tell you the exact same thing I just told him. No dividends, no thank you. No options, no thank you. MIG, Rob, doesn't have weekly options. Nope. SO, isn't that Southern, SO, Southern something. SO. Southern Company. Okay, that's going to be a no for this week. And the reason it's going to be a no for this week, look where it is. Okay, now, I love the fact that it has a nice movement. Look at that movement. Up, down, up, down, up, down, up, down, up, down, up. Waiting for it to come back down again before I jump in. It's in a nice upward trend. Great. How far is it going to go up? It's going to go up until it stops. Okay, our RGP, we're looking at it right now. Okay, look where it is. It's at the high of the year. Okay. So high of the year, no thank you. Because high of the year, where do you think it's going to go next? Imagine this. You're on a ladder at the top of the ladder and you're waiting for someone to bring you a taller ladder. It just doesn't make sense. You buy low down here. Okay, see, look, she goes up, comes down. This is where you buy. Goes up, that's where you sell. It comes down, this is where you buy. This is where you sell. Okay, at this point, she's going to come back down again. That's where you buy on it. BIVI. Hey, James, do you have a list of dividend stocks that you like? Yes, I do, Luke. Are you ready? Got a pencil, paper? You ready for this? Okay, I don't do Bitcoin. Okay, so you ready for the list? Here it comes. Hope you guys got a pencil and paper. You ready? Uh-oh. I just found your stock calendar app on your site, but it doesn't work anymore. Believe it or not, I have been looking for years to someone to fix the software that I created. I have a whole bunch of software that I created. It worked great years ago. But as life goes on, the websites change. I love the if it works, don't fix it. Yeah, nobody else believes that because they like to fix things. They like to make it better. But when they make it better, they change something and all of a sudden the software doesn't work anymore. Do you have a list of 20-year dividend stocks with weekly options so that I can pin it? Share, thank you. Jilly Berry, yep, you ready? Hope you got a pencil. Pencil, paper, mascara, crayon, chalk. Lipstick, I don't care what you write with it. You ready? Here we go. Go to Google. In a Google search, you can go to Bing, you can use whatever search engine you want. In the search engine, you type in the words Dividend Kings List 2024. You will get 54 companies that have increased their dividends for 5 decades or more. Next, Dividend Aristocrats List 2024. 67 companies that have increased their dividends for 25 years. Dividend Champions List 2024. 150 companies that have increased their dividends for 25 consecutive years. A little bit different than the aristocrats, but still 25 years of increased dividends. List number 4, Dividend Contenders List 2024. 300 companies that have increased their dividends for 10 to 24 years consecutively. And then I always like list number 5. I like the number 5 for some strange reason, is Warren Buffett's List 2024. Now, if you know of any other traders that are consistently profitable and consistently, in the news and really good at what they're doing, fine. I'll take a look at their list too. Okay. Oh, thanks, 86. Thanks, Luke. You got it. Good stuff. Briz, you like that? Okay, so where did we leave off? UPS. Mama said, knock you out. How you doing? Nice to see you again. You've been here a couple of times. I like it when you interact like that. Dividend stocks pay multiple ways. Will you name them, please? Well, yeah. Well, you got the dividend, you got the stock appreciation. That's about it. I don't think of any other way they pay out. Nice going there, Mama. Susan and Job. Well, good evening and pleased to meet you. All right, so let's take a look at, what are we looking at next? Nothing left. Look at, okay, UPS. EXPD. I'm thinking that's going to be a no. EXPD. Yep, that's a no, dude. You're new here, so I'm going to let it slide. Okay, weekly options and dividends. 20 years or more of increased dividends. Okay, so EXPD, no, it just doesn't fit. Okay, no, don't get me wrong. I'm not saying it's a bad company. I'm just saying for this trading strategy, for me specifically, it's a no. Okay, RGP, Pfizer, we'll take a look at that one. They pay out an option premium if you sell contracts. Lucky Chucky, how are you? Let's quickly take a look at UPS. We'll look at UPS and then we'll look at Pfizer. All right, we're going to look at UPS, then Pfizer. First thing, UPS. Here's the high, here's the low, here's where it was, here's where it is. Look at the direction. Up, down, back up again. Cool beans. ZNG, Zing, how are you today? All right, currently UPS is at 136.20. The 136 are going for $4. Nice. I like that. Any suggestions on dividend paying stocks to invest in and hold long term? Kashif Ali, I don't do anything long term. Longest I've ever held anything is 9 months. Okay, Zing, AT&T, we've already done that, and it's not that great. Okay, but we're looking at UPS at the moment. Okay, a year ago, UPS is at 152. We topped out at the end of the year at 164. Okay, look at this big drop here. Back in July, from 148, she drops all the way down to 126. That's a $22 drop. AMCR, that's going to be a no, dude. Sorry. How long do you hold for? 5 days, ideally. Jump in on Monday, get out on Friday. That's awesome. What is the growth of UPS? Adam, I'm not looking for growth. Okay, I don't understand why you think I'm looking for growth. I want to jump in on Monday, get out on Friday. What kind of growth can you see in 5 days? Okay, I'm not looking to put my money into something and wait for it to increase. No, I want 1% a week. I can live very comfortably on 50% of my portfolio. Okay, whatever your portfolio is, divide it in half. Can you live off that? Is the EV any good? I have no idea what you're talking about, the EV. Is that a stock? EV? I don't know. Let's take a look. EV. Yeah, hell no. Back to UPS. Okay, so the high of the year, 164. That's a big drop. Here's the bottom of the year, right there, August 8th. August 8th is the bottom of the year, and that was 123.12. Ben, okay, empty pockets. Benjamin Franklin, something like that. That's a monthly optional stock. Now they are a dividend king, and they have been around for a long time, but they don't fit. Okay. Tesla, no. Yikes. Enterprise value. Okay, Adam, explain to me why I'm interested in enterprise value. I'm going to pause these questions for a minute. We're looking at UPS. Okay, so here's the bottom back in August. She goes up, channel sideways, goes up, down, up again. I'm not 100% sure of this right here because it's awfully close to the 30-day high. Now, I like 30-day highs for a reason. Okay, a 30-day high and a 30-day bottom are two isolators I like because at a 30-day bottom, stocks go up. At a 30-day top, stocks come down. Okay, so here's a 30-day top here. She came down, she went up. So she has some room to go up higher, but it's UPS. Do you like UPS? Do you think UPS is going to continue higher? We'll take a look. 1 week, 2 weeks, you honestly think it's going to continue to go up for 3 weeks? Okay, you got to take a lot of things into consideration. One thing to take into consideration, the percentage of movement. Okay, so the bottom's at 127. The top is 137. That's a $10 move. A $10 move on a $120 stock, that's less than 10%. Now, from 137 to 130, that's only $7. That's 5%, 5% drop. Then from 130 to 135, that's $5. That's a 3% increase. The numbers are very important, okay? Because numbers don't lie. Do you remember House, Hugh Laurie? People lie. Everyone lies. Numbers don't lie. 1 plus 1 is going to equal 2 no matter where you come from. You can come from another galaxy and 1 plus 1 is still going to equal 2. All right, yikes. Okay, Adam Olam, that's a no. Tesla doesn't pay dividends. It's going to be a no. Uh-oh. Enterprise value. Enterprise value doesn't mean anything to me. I have a Thinkorswim account. Hold on. Ben's a no. VFC. That sounds familiar. Hold that thought on VFC. VFC. What license do you have? Oh, hold on a second, Colin. Hold on, I got it right here. Wait a second. Oh shit, I thought I had it right here. Yeah, there it is right there. Yeah, so you got a license. Okay, jump in and call with him. He'll run you through it. Thanks, Hollywood. Questions disappeared. PayPal's a no. They don't have dividends also. Drive around town license. I like that one. I got a drive around town license. Okay, Noah. PayPal doesn't have dividends. Okay, and if they have started their dividends, they're not quite there yet. Stellantis, never heard of it. All right, we're going to do Pfizer next. Luke, if you have a license, you would have to scam people to pay for it. That's funny. Trader Kev, how are you doing today? Enbridge, you got Superfly. You got to give me this ticker symbol. Okay, hold up. Okay, we just looked at UPS. Let's finish up with UPS. Okay, so UPS is currently at 136.20. So the 136s are going for $4. Let's see what kind of rate of return the 126s are actually going to be. The 136s, sorry. The 136s, there it is. All right, let's do 100 shares because people freak out when I do more than 100 at the market. Confirm and send. Here you go. Buy one covered UPS. 100s, those are the weeklies. Remember, I only like weeklies. I like to buy on a Monday, be out on a Friday. If you do not have 10, 15, 20 minutes a day to pay attention to your personal finances, you're in the wrong place. This is not for you. I'm retired. All I do in the morning, I get up and I look at my personal account, 15, 20 minutes on my personal account. Okay. My corporate account with you good people, well, that's like a couple hours because I have to answer lots of questions. Okay. And I don't mind. I actually enjoy doing it. So I haven't even been retired a year yet. I retired back in the last November. So I'm finding this kind of fun and exciting. All right. So by one covered UPS 100s. Those are the weeklies. 25 October 24. That's next Friday. I want to jump in Monday morning. I want to be out Friday afternoon. Does it always work that way? No, it does not. Does it work that way most of the time? Yes, it does. I like to jump in on a Monday, be out on a Friday. So the 136 call option right now is at 136.20. Great. Why am I selling at a loss? But I'm not selling at a loss. Hold that thought. Against UPS at the market to open. 131 is the break even. Well, it's currently at 136. Anything over 131 is going to be a profit. Maximum profit on this one trade, 419. So let's get the calculator. The calculator. Why does the calculator keep disappearing? Damn thing. All right, calculator. Oh, 419 is the profit right there. See it? Maximum profit. Now remember where I said I want simple, safe, predictable, and consistent. It's telling me exactly what I'm going to make on this trade if I do it. That's consistent and predictable. It's telling me what I'm going to get before I even do it. All right, so 419 is the profit. The cost of the trade, including commissions, 13,181. Okay, 13,181. Uh-oh. Let me try that one more time. 13,181. That gives me a grand total of 3%. So why am I buying it at 136.20, selling it at 136, still walking away with 3%? They dragged you out of retirement to help us degenerates. Ivan, that's funny. All right, let's go back. AG&C. Oh, I missed some questions. Uh-oh. Oh, wow, I missed quite a bit of questions. Okay, here we go. Enbridge, BA. Ooh, Larissa wants to take a look at Boeing. BA. Okay, so there we go. Huh, that's weird. All right, anyway. How are you doing today, Fred? I'm doing awesome. Thank you for asking, Fred. Okay, Cat Nipper. What tool are you using? Cat Nipper. This is Think or Swim. It is offered through Charles Schwab. It's free to download and use for a while. However, they would like you to move your account over to them because they want your money. You got to go somewhere. Okay, so no matter what you think, you have to trade somewhere. Okay, I trade with Thinkorswim and I also trade with Robinhood. I've written a book 15 years ago on choosing a trading platform where I looked at 20 or 30 different platforms that were available at the time. Okay, empty pockets. Are there any sub $20 stocks that fit the criteria? Empty pockets. I'm going to give you. Give me a second. I'm going to get to those. All right. I'm glad I found a channel. Kerry Dills. Thank you for that. AG&C pays weekly dividends. No, it don't. Coco. Great question. He uses a catalyst. Okay. I know nothing though. Archived Byte. Okay. Well, Archived Byte, I'm going to disagree with you. A lot of people say they don't know anything, but actually, you know more than you think you know. Okay. Now, as you're driving your car, right, from one town to the next, one street to the next, one city to the next, you're going to notice things. You're going to notice stores like Walmart, Starbucks, Mobil, Hess, Chevron, British BP gas station. You're going to know Texas Roadhouse. That's a steakhouse. What else is good out there? AT&T, so sure, or T-Mobile. You know certain things, okay? Firestone, like what kind of tires are on your car? Ford, what kind of car do you have? Ford, General Motors, Tesla. These are all companies that are publicly owned, which you can trade their stocks. You either know something about them or you don't. Like the blue jeans you're wearing, you probably heard of Levi. Well, Levi Strauss is a company in which you can buy shares in. Okay? Coach, if you like Coach pocketbooks or Coach whatever, they are a public company that you can invest in. Okay, so you think to yourself, never buy something you don't understand. If you take your car, your General Motors car, to ExxonMobil to put gas in your car, well, you are paying money to someone else. So why not you buy ExxonMobil stock? So every time you go to ExxonMobil, you're adding to your own. I mean, you're buying gas anyway. Okay? Certain things you do on a daily basis that are consistent that you know of. I'm sure you probably heard of Starbucks. Well, Starbucks is a company you can invest in. So every time you buy a Starbucks, you say, cha-ching, I'm making money off of my own stock that I own. So you know something. You're just trying to reassociate how to put part A, part B together to come to part C. Okay, everybody knows something about the stock market. Whether you think you do or you think you don't, that's totally irrelevant, but you do know something. Okay, when you go to a store, Circle K, well, that's a company that you can buy. Dollar General, that's a company you can buy. You go to Walmart, that's a company you can buy. So if you want to, because at some point you are going to retire and you are going to need to have some money coming in consistently unless you want to keep working. Now, I cashed out last November. Fine, I have enough to live off. I can pay all my bills every month by my 1% return that I get on a weekly basis. Okay? So you do know, but you're not, you just got to add them together. Adrian, hi. You have to make an account with Charles Schwab. After that, download Thinkorswim. Well, you can download Thinkorswim first and then use it for about a month. But after that, they are going to ask you, say, hey, buddy, what are you doing? Yeah, they do want you to have an account at Charles Schwab to be able to use this. Now, I've been using it for 20 years before Charles Schwab bought it, before TD Ameritrade bought it, when it belonged to Tom Sosnoff. He's the one who created it. It's a cool trading platform. It really is. It has lots of perks. All right, so empty pockets. You want to look at stocks that are below 20 bucks. All right, well, let's take a look. Watch list. Okay, so dividend contenders. Are you seeing this list here? $3, $4, $6, $6, $10, $11, $11, $12, $12.50, $13.50, $15.30, $15.40, $15.60, all the way down to here to $23.28. Then we come all the way down here. Look at this. 24, 26, 27, 28, 30, 31, 33, 34, 35, 44. There's a whole shitload of companies under 50 bucks per share. Oh, under 20, you said. Okay, under 20, under 20. Okay, so here we go, right here. Okay, it's 1, 2, 4, 6, 8, 10, 12, 14, 16, 18, 20, 22. So I count 22 on this particular list. Okay, on this particular list, 2, 4, 6, 8. Good, there are a whole bunch of them out there. You just have to be able to find them, see where they are. Good money in crypto or stock. Yeah. I don't do crypto. Sorry, dude. All right, so what are we looking at? Okay, good money, blah, blah, blah. All right, so how do I become part of the morning group? William Simmons, how are you today? All right, so to become part of the morning trading group, you need to go to see the top left corner where it says Dividend Stock Talk, my pretty little face over there. Yeah, click on that. That will bring you to the links in my bio. First one is going to be the 10-minute trader. Okay, if you do a Google search on the 10-minute trader, ask questions like, how long has the 10-minute trader been active? Who owns the 10-minute trader? All kinds of questions like that. You will find that I've had this website for over 20 years. Very first page right here, trading live online. You can click on that and that will take you to my Patreon. Because if I knew how to do a membership site, I would, but I don't, but these people do. Okay, Dividend Stock Talk. Okay, that's where you sign up to be part of the morning trading group. Also, as you come all the way down here, click on view all. That's going to show you all the links to all my social media. You have YouTube, Twitter, Facebook, Instagram, podcast. Yep, I have a podcast. There's over 900 episodes of my podcast, Dividend Stock Talk. Doesn't look familiar? Uh-oh. Internet problems. Okay. There's over 900 episodes of this podcast. Why am I having issues with internet? All right, I'm not going to give you an example, but there's about 900 of them here. Okay, there's a lot of information there, and they're boring as hell. Okay, I do the same stocks over and over and over again. Okay, also, as you scroll down further on the 10-minute trader, you'll actually see the 3 accounts that I share. Okay, account number 1, account number 2, account number 3, and it actually has the percentages that I made on those weeks. Okay, 3.3, 3.36, 1.45, 2.86. 2.26, 2.01, 2.2, 5.2, 1.1, and 3.8, so on and so forth. Goes all the way down to January, because I update this every year. And if you go all the way down to the bottom, these are clips from a blog post that I had in 2011. My starting date was August 31st, 2011. My average was 9% per month when I first started 15 years ago, 14 years ago? I don't know. Okay. April 19th, 2002. That was another slow week, but still moving forward. Our profit for this year is still at 34.2. 33 weeks, running total 87%. Our weekly average has dropped. Oh, it's dropped to 2.66% in 2012. I was only making 2.66% per week in 2012. Don't you feel bad for me? Anyway, yeah, I've been doing it for quite a while, so it's not an issue. Like, do I know what I'm doing? Have you had issues with TD Ameritrade and Charles Schwab merger? Yes, I did. But Charles Schwab bought TD Ameritrade, I think it was back in January or February, and switching from one account to the next, it was cumbersome. But now everything I own is into Charles Schwab. Okay, personally, I'd like to go back to just Think or Swim and just be totally independent of that. But no, it doesn't work that way. Okay, what do you think about Carnival Cruise Line? Now, wait a minute. Weren't we supposed to be looking at Pfizer? All right, we're supposed to be looking at Pfizer. Well, let's take a quick look at Carnival Cruise Line. Carnival Cruise Line is going to be a no for this week. Reason being, here's the high of the year right here. Okay, I wait a week or two for it to come back down because look, it goes up, it comes down, it goes up. What's going to do next? It's going to come down. When it comes down, I'll keep an eye on it. When it turns around, goes back up, I will check the numbers. Right now, the numbers look like 2120, the 2150, 23 buy. That's over 1%. It would be a yes, but the chart is telling me no. Okay, there's about 300 companies I look at consistently. Okay, but just because the numbers work, if it's the wrong time to buy, well, it's the wrong damn time to buy. That's just that simple. If it's at the high of a 30-day period, because you have a 30-day bottom, what usually happens at 30-day bottom? Usually it goes up. It gets to a certain point where assholes like me said, I'm good. I'm going to take my profits. Now the stock drops. It gets to a certain point, and assholes like me say, wait a minute, that's a good deal. I'm going to start buying. So what happens? It goes back up again saying, great, I got my profits. I'm out. I don't keep anything. The longest I've ever held anything is 9 months. And I didn't do it because I wanted to. I bought the thing, it dropped. I had to wait 9 months for it to go back up. But what happened in those 9 months? Well, in 9 months, I collected 3 dividends. Cool. And then I collected, I think, 33 or 35 premiums. Look at the premiums. Okay, on a $20 stock, 21.50 is 33 cents. That's over 1%. Now, do I get 1% every single week? No. Sometimes I make less than 1%. Sometimes I make more. But it averages out to over 1% per week all year long. Okay, so let's take a look at Pfizer. We said we're going to look at Pfizer, so let's do it. Pfizer. All right, Pfizer. The high, the low, where was it? Where is it? What direction? Look, down, up. Currently at 29.24. The 29s are going for 45 cents. But I'm losing 24 cents right off the top. So if I take 24 cents off of this 45, well, now I'm walking away with 21. That's not 1%. Look at the 29.50s. 21 cents. That's not 1% either. Now, don't get me wrong. I have bought Pfizer many, many times. You will find some weeks nice premiums, other weeks not so much. So it's always a hit or miss. That's why I always say, look at the numbers. Do the numbers make sense? I like Pfizer. Really, I do. I have bought it in the past. I bought it this year. Okay, I bought it and made my 1%. Great. Wait for the dividend to come up. What's happening? Well, right now, it's not paying 1%. So right now, it's going to be a no. It might be a yes, in a week or 2 or 3. But at this moment, well, look what she's doing. Okay? Up, down, up, down, up, down. So right now, it's coming down. So once it gets down to the point down here, because that's what profit taking does, you got people like me, some of the people in the audience will do the same thing. If I'm in a profit, here's 2 things to remember. It's kind of like one thing, but it comes in 2 parts. You ready? This is something you should probably write down somewhere. It's not a profit until you take it. That's one. The second one is so freaking awesome. I'm driving down the highway and I heard this. I said, holy shit. I had to pull off on the side of the highway, pull off the side of the highway, and I had to write it down because I knew I wasn't going to remember it. Here it is. Are you ready? Nobody ever went broke taking profits. Who do we have over here? I can't even read that name. Compton, whatever. Dude, how's it going? Glad to have you here. So think about it. Nobody ever went broke taking profits. If you buy a stock and it goes up, take the profit. Don't take the profit. It's totally up to you. But nobody ever went broke taking profits. That's pretty ingenious if you think about it. Yep, you run the risk of it continuing to go up. You also run the risk of it turning around and you lose your profits. Okay? It's a game. If you understand that it's a game, it's kind of like Monopoly. You play to win. Okay? If you're going to play this game, you're going to play to win, fine. Find a set of rules and stick to them. If you're going to throw a dart, they had a study back years ago where they had a monkey, and the monkey would throw a dart at the newspaper to find out what stocks to buy. And it found out that the monkey actually did a good job. It depends on how you play the game. All right, let's keep going. How do you become a member of your morning group? William, I think I just pointed that out a little while ago. Oh, we're at 10:35. We've got an hour to go. ADM, Archer Daniels. Ivan wants to look at ADM. Archer Daniels, yeah. Okay. It's going to be a no this week, but let's take a look. Here's the high. Here's the low. Here's where it was. Here's where it is. Look, up, big drop. Look at the big drop. From 77 down to 51 in 1 month. 1 month, it went from 77 to 51. Okay, she went up and then trading sideways ever since. But Friday was a big down day. Why? Well, let's go find out. The last 30 days. Here we go. Here's the last 30 days right here. 30 days ago, $60.50. 29 days ago, $62.60. And then she just drops. Goes back up. And then big drop on Friday. Now, Friday's the new 30-day bottom. Okay. That's a nice number to look at. You take a look at that number and you keep your eye on it, because as soon as it isolates itself, because right now, Monday could be lower, Tuesday could be lower, but as soon as you have 2 days to the upside, then it's a good time to jump in my humble opinion. That's what I look for. Fine Sarah, how are you, Fine Sarah? Nice to see you over here on Instagram. Instagram, yeah. Okay, so anyway, that being said, keep an eye on it. If you like, what are we looking at? Archer Daniels. Now, Archer Daniels is a dividend king. They've been around for over 100 years. They have increased their dividends to their shareholders, that's you and me, for more than 5 decades. So why is this not on your list? That's a question. If the company's over 100 years old, if they consistently increase their dividends for more than 5 decades, why isn't it on your list? That's a question, and it deserves some consideration. Take a look at it. If you're here to make money and you want to be simple, safe, predictable, consistent, all that kind of nice, neat, fun stuff, find a company that is consistently profitable and will give you a 1% return on a weekly basis. And to do that, it has to have weekly options. Okay, let's keep on going. Okay, Achieve Byte. Uh-oh. I missed some questions. NVIDIA is going to be a no. Who keeps coming up NVIDIA? Uh-oh. I missed all these questions. What is involved in buying a stock and using options to get a return? Ooh, Archived Byte. Cool question. All right, let's take an example. We'll use this one as an example. Okay, now, Archived Byte. You ready? It is a simple A, B, C, D scenario, or 1, 2, 3, 4. First of all, number one, you gotta pick a stock. Great. Dividend kings, dividend aristocrats, dividend champions, dividend contenders, Warren Buffett's list, whatever you want to find that list. 2, when are they paying their dividend? For that, you're going to need a dividend calendar. Well, Thinkorswim has a dividend calendar right here. When are they paying a dividend? I get this question 2 or 3 times a week. Hold on a second. Ginger tea and honey keeps me from coughing. I'm not used to talking so much. All right, so this is a calendar. These green little dots are what is called the EX dividend dates. There's 4 dates to remember. 1 is the announcement date. 2, the EX dividend date, the last day the stock trades before the dividend is paid. 3 is the date of record. Whoever owns the stock on the date of record is entitled to the dividend. And 4 is the payment date when you get paid. So why do I use the dividend calendar, or the dividend EX dividend calendar? It tells me when the company is paying its dividend. Why is that important? Because most stocks, most dividend stocks, increase in price before the dividend is paid. So I like to jump in 2 weeks before. Kinder Morgan, the 31st. Okay, if I like Kinder Morgan, they have a 28-cent dividend. Okay, fine. 2 weeks before. Okay, this is 1 week. 1 week before, 2 weeks before, on a Monday. I always buy on a Monday. The reason being is Monday has the highest rate of return when it comes to time value. Time value is like Monday morning at 9:31 a.m. to 3:59 p.m. on Friday. That is the maximum amount of time value you can get. All right? For the weekly. If you do monthly, it's a totally different story. Okay, but week by week by week. That's why I like Monday through Friday. Monday through Friday. Every Monday is my longest trading class. As we jump in on Monday and we take a look at all the companies that have a dividend coming up this week. Up for consideration. We take a look at the charts. We take a look at the movement. We take a look at the rates of return with the options. Okay, fine. So if we know the stock is going to move up just before the dividend, that's great information. But what do you do with that information? Do you buy the stock and just take the run up? Oh, where do you jump in? Where do you jump out? That's why I like options. I buy at the market on the open on Monday morning. I don't care what the price is. Seriously, I don't. However, I will not do it unless the chart tells me so. Okay, right now with this company right here, it's going to be a no. But let's say hypothetically it is a yes. So let's move it back. Okay, that right there, in my humble opinion, that right there is a perfect setup. 30 days ago, she went up, your 30-day high. She came down, 30-day bottom, 2 days to the upside. Perfect opportunity to jump in. Great. What is it costing me to buy it? What's the rate of return I'm going to get? Okay, and can I be out by Friday? That's what I'm looking for. Okay, so once you pick the stock, right, then you go over to the trade grid, all right? Now, you put your stock symbol up in the trade grid up here, and it tells you what is the opening price, what is the high of the day, what's the low of the day, what's the close of the day, and how much volume, I mean, how many shares. And if you want to buy it, you just click on the ask. The bid is if you're selling, the ask is if you're buying. If I want to buy, it's the ask price. If I own the stock and I want to sell it, I'm collecting the bid. And the difference between the two, between the bid and the ask, what I can buy it for and what I can sell it for, that is called the spread. It may sound confusing, but think of it this way. You have a corner store. It's either going to be a 7-Eleven, Circle K, Quick Stop, Quick Mart, but there's a corner store down the street from you. I don't care what the name it is, but it all works out the same. You walk into the store and you can buy a gallon of milk. Now, the owner of the store buys the gallon of milk for $3.50. He sells it to you for $4. He makes the difference between the $3.50 and the $4. That's the spread. That's his profit. So when you're in the stock market, same thing, bid and ask. Okay, the market maker gets the spread. Now, the market maker is an ingenious person. He's the only one you can buy from. He's the only one you can sell to. Okay, you can't sell it to Tom, your neighbor. You can't sell it to your Uncle Peter. You can't sell it to your best friend named Fred. You cannot do that. You buy and you sell to the market maker only. Same thing with the options. Now, stocks are usually traded in New York. Options are usually traded in Chicago. Okay, so the Chicago Board of Options is in Chicago. New York Stock Exchange is, let me think, New York. Okay, so that's basically what it is. All right, so let's keep on going. Buy the shares, blah, 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 blah. No dividends, blah, 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 blah. Cool, nice, gotta like it. Can you make 1% per month with 2.5 million? Well, lifers, if I can't make 1% per month, I'm doing the wrong thing. Now, I make 1% per week. So 1% per month, that's easy. I can do that with my eyes closed, basically. I love this, man. Keep it up. Cabanos. ¿Qué pasa, amigo? ¿Cómo está? Duran, NVIDIA. No. Let me tell you why I don't like NVIDIA. There's a couple of reasons. A couple of months ago, I don't know if some of you remember, before NVIDIA did a 10-to-1 split, NVIDIA was at $1,200 per share. Everybody says, ooh, wow, great, awesome. Yeah, those are the people that are uninformed and don't know shit. Basically, you take a look at what is the company actually worth. That is the book value. Okay, if you take everything they own and everything they owe and you come up the spreadsheet or the balance sheet, what do I own? What do I owe? What's my net worth? NVIDIA has a net worth of $2 per share. So you want to pay $1,200 for a company that's worth $2 a share. They did a 10-to-1 split. Now it's at 120. Well, the book value is still $2 per share. What is the dividend on NVIDIA? Okay, you're paying 100. What is NVIDIA? Hold on a second. NVDA. It's $138. $138. What is the dividend? The dividend on NVIDIA is around 1 penny. 1 penny. And you think that's a good deal? This is pure speculation. Okay, yeah, they're at the cutting edge of a new technology. Wonderful. Okay, but it doesn't fit my criteria. I like simple, safe, predictable, consistent. And I do not want to buy a company at $138 per share if it's only worth $2 per share. I like Ford, General Motors, AIG, Bank of America. Their book value is higher than the stock price. So if I'm paying $10 for Ford, the book value on Ford is $14 per share. It's a yes to me. General Motors, I think it's $44 a share. But what's the stock price? Wasn't it something like 30 something? 49. Okay. Well, still, General Motors has $44 per share book value. What does that mean? That means if the judge says, hey, you got to liquidate and pay off all your investors, fine. NVIDIA, you're getting $2 a share. General Motors, you're getting $44 a share. Ford, you're getting $14 a share. Okay? Hey, bro, I asked a couple of questions. Can you scroll up and look? K-Fly, you're going to have to ask the questions again because you got to all right, K-Fly, think of it this way. I get Instagram over there, Facebook here, Twitter here, TikTok here, YouTube here, another Twitter account there, and another YouTube channel here. I'm getting questions from each and every direction. I try to do my best to answer as many of them I possibly can. Okay, so if it's up higher, yeah, I'm not going to be able to get to it. If it's down lower, I will get to it before the night is over. Joey, how are you today? You bought at 8. Okay, K-Fly. You bought it at 8. Fine, dandy, wonderful, big deal. Where do you plan on getting out? Because right now it's nothing but a dust collector. Okay, it ain't a profit till you take it. Nobody ever went broke taking profit. Wildcat Sam, how are you? Pick a spot. If you want to hold it forever, hey, more power to you. You know, great, wonderful. There's nothing wrong with it. Okay, but if you want to sell it, you want to make a profit, fine. Sell it, make a profit. I'm not telling you what to do. Okay, I don't tell anybody what to do. In fact, I always tell you people don't listen to a damn word I say. If I say something, go fact check it. Okay, General Motors. Oh, what's the current price right now? Do your own research. Where's the high? Where's the low with General Motors? Where's it going? These are easy questions to come up with, or easy answers to come up with. I'm just reading the information. Where do you see the stock going over the next 5 years? It was 52 or so. All right, Kyle, you're misinterpreting what I say. When I say I buy on Monday, sell on Friday, I really don't care what's happening in 5 years because I'm at 60. Okay, I have a lot of friends I went to school with are no longer here. I am by no way whatsoever delusional thinking that I have guaranteed 5 years. I like to think I have next week. So that's all I look for. By Monday, sell on Friday. Okay, I'm not looking long term. Okay, I'm strictly short term. Okay, that's why this strategy, better strategy, profit. It's not profit if you don't take it. Thanks, Redneck. How do you pick the strike price? Oh, that's an easy one. K-Fly, you're right. Day traders always lose. I'm going to agree with you. I'm not a day trader. How's your list? Okay, all right. How do I pick a strike price? Well, good question. Currently, the current stock price on General Motors at this moment in time is $49.50. Well, if I'm buying it at $49.50, I'm going to sell the $49.50. That's going to be the highest rate of return if I like it. All right? But I could sell the 49s. I could sell the 48.50s. I could sell the 47s. I could sell the 53s, the 51s, the 52s. I can pick whichever one I want. Now, but there's certain things you need to remember. The line that splits between here, the purple up here and the black down here, okay, the black down here and the purple up here, okay, this is at the money, the line, okay, that's at the money. Out of the money, the 49, the 50, the 51, 52, 53, okay, it's a lower rate of return, okay. At 49, okay, you're getting the higher rate of return. And then the 48, it starts to drop. The 47.50 starts to drop. So the further you go, the less rate of return. The further out you go, less rate of return. The highest rate of return is at the money. Right now, $49.50 is the ask price, the bid, the ask. Okay, the strike price, $49.50, that's when you have the highest rate of return. Now, I'd even think about doing the 49s, depending on what they are, because the 49 is a safer trade. Because there's always going to be a trade-off. Okay? Higher rate of return, more risk. Lower rate of return, lower risk. I like low risk and consistency. So let's do General Motors just for the fun of it and compare the 49.50 to the 49. We might even look at the 48.50. So let's take a quick look. Okay, let's get rid of this. Let's go down here to covered stock. Let's take a look at the 49. Take a look at 100 shares. Okay, go to market, and here we go. Okay, so the break even, 47.72. Maximum profit, 128. What's it cost me? 4,700. Oh, let's get the calculator. Calculator. 128 is the profit. See, right here, 128 divided by the cost of trade, including commissions, 47.72, and that gives me a rate of return of 2.68 for the week. Okay, that's at the 49.50. That's the 49. Okay, see right here where it says 49. Buy one covered call, 25 October 24. That's next Friday. The $49 call against the General Motors. Okay, Joey, what type of order do you buy the stock? I use a market order. When I'm buying, I'm using a market order. Okay, when I'm selling an option, I use a limit order. Okay, so what was that rate of return again? 2.68. That's at the 29. Okay, so now we're going to the 49. Sorry. So now we're going to change it to the 49.50. Let's get out of that. Okay, so now we're going to change it to the 49.50. Everything else is the exact same. So my profit, 154. Okay, let's do my calculator. Clear. 154 divided by, what's it costing me? 4,796, and that gives me a rate of return of 3.2. Okay, so the 49, okay, is giving me a less rate of return, but it's a safer trade because right now the stock's at 49.50. So at 49.50, Trent, how are you doing, Trent? How you doing? At 49.50, you get the highest rate of return, which at the moment is 3.2, but it's not as safe as the 49. So you got to take, now let's, for the fun of it, let's go take a look at the 49, 48, 50, the 48s. What's the 48s going for? Okay, it's giving me $87. Okay, clear that. $87 divided by 4,713. That's 1.8%. It's 3 strikes in the money, and it's still giving me 1.8. That's even safer trade. The further up you go, the further in the money you go, the safer the trade. Okay, so look what the break-even point is. The break-even point is 47.13. Well, the stock is currently at 49.50. So anything over 47.13 is going to be profitable. Okay, that's just the way it is. I'm looking for simple, safe, predictable, consistent 1% per week. Now this one here, 3 strikes in the money, it's still giving me almost 2%. I hope that clears up some things with some people. Let's get out of all this and let's start looking at some more. Okay. Olesh, what platform is this that you're showing on the screen? The blue solid bars and the candles. Okay, Olesh. Ola, is that right? Ola. Okay, this is Think or Swim. Okay, it is offered through Tommy. What's happening, Tommy? It is offered through Charles Schwab. Okay, so you can go to thinkorswim.com, download it, and be able to use it for a month or so for free. And then Charles Schwab will coordinate with them if you want to actually continue using it. Okay, Archives Byte. If you sell a call for 1% by the end of the week, can it be more at the end of the week? No. Okay. Uh-oh. I gotta go back to, where was that question? Hola, ¿qué pasa, amigo? ¿Cómo está? Uh-oh. Uh-oh. Where the heck was that question? Wow. Way up. Uh-oh. Wow. Okay, here we go. Archive by, I found it. Because see, once I take my finger off it, they all shoot up and I miss all those questions. So I had to scroll backward. If you sell a call for 1% by the end of the week, can it be more at the end of the week, or is it? Okay, so here's the thing. Archive byte. When I buy this stock first thing Monday morning, I own that stock first thing Monday morning, okay, at 9:31. Hola, no hablo español, señor. Muy piquito. Anyway, so at the 49.50, if I buy it first thing in the morning, I own the stock first thing in the morning. If I sell the covered call first thing in the morning, because when I'm buying and selling at the exact same time. Buying the stock, selling the option at the exact same time. So that premium goes into my account instantaneously. Now I have a credit card and a debit card attached to my trading account. That's why I use to pay all my bills. Okay, all my money is in here. Well, I have a couple of thousand set aside for emergencies, but other than that, all my money is invested. Why? Because I believe in the American economy. I believe in Ford. I believe in General Motors. I believe in Chipotle. I believe in Home Depot, Lowe's, all the American companies here in the United States. I believe in them. So that's where all my money is. All right. So that being said, that goes into your account instantaneously. Now, what happens on Friday? The stock either goes up or it goes down, one or the other. If the stock goes above my strike price, 49.50, well, Monday morning, I will have no more General Motors and I'll have all my cash back. The 1% that I'm collecting from the premium, that's just mine. Think of it as gas money when you go into the store. Say, hey, buddy, I'm running to the store. You want a six-pack? Yeah, pick me up a six-pack. Here's some gas money. You go, you bring him the six-pack back. The gas money stays in your pocket. That is yours. Hey, just because he drank all the beer or he spilled the beer, he doesn't get that money back. Okay? That is just for the privilege of me holding it or me doing him that favor. However you want to equate it. If I'm buying it at $49.50 and I'm selling it at $49.50, I'm collecting the premium. Okay? And that premium goes directly to me instantaneously into my account and spendable. Okay? If the stock goes up over the strike price, which I sold $49.50, I no longer own that stock, and on Monday I have all my cash back again, and I'm looking for something else. Hemdar, okay, I can't read that one, dude. Hammered, Targ, hand. I don't know. How you doing? Hi, Araguay. Ooh, Araguay. Cool beans. How's it is over there? It's kind of nice and warm over here. I think it was in the 80s today. Lovely weather. Yeah, we had a hurricane a couple of days ago. Kind of messed everything up. All right, let's keep on going. Or is it limited to the 1%? Okay, archive byte, whatever you collect is whatever you collect. Now, we just went through the example. Okay, at 49.50, you're getting 3 point something percent. The 49, you're getting a little bit less. The 48.50, you're getting a little bit less. The 48, you're getting a little bit less. Okay, that's a choice that you have to make. If you buy the stock, great. Now you have a choice of which one of these you want to sell. That's like if you buy a car, or let's say, yeah, you buy a car. Let's call it a '68 Firebird convertible. Let's say you pay 10 grand for it. Great. Now you want to sell it to someone else. Well, you want to get paid more than you paid for it. How about someone comes by and say, hey, give you $1,000, hold it for me for a week. Okay. Guy comes back, he gives you the money for the car. If he doesn't come back, you keep that money and then you sell it to someone else. Same thing. All right. Dollar General, huh? DG. I like Dollar General. Dollar General. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at this. Up, down, big drop, down further. We're sitting at $80.75. The 81 is going for 115. That's over 1%. Great. Well, let's look at the chart to see, is it the right time to buy Dollar General? Okay, let's take this, move it aside. A year ago, Dollar General was at 115.88. The high of the year was back in the middle of March, and that was 168.27. The big drop came right here at the end of August. She was at 124, and she dropped all the way down to 77. Wow, big drop. Okay, last 30 days. Here we are. Check that out. Last 30 days. We're at 87. We went down, went back up. 88 was a high. She went down, back up, down, back up. Now she's going down again. The 30-day bottom is right here, right around 79.50. Okay, so I personally would wait a little bit longer till you find the actual bottom where it turns around, goes back up again. If you like Dollar General, I mean, it's a silly question. If you like Dollar General, great. But why would you buy it as it's still going down? If you like it, just hold off a few days. Wait till it finds its bottom. See here? Find the bottom, turn around, go back up. Okay, doesn't always work, but that's, you want to find it where the bottom is, because the bottom's here at 79.50. Well, it went all the way up to 83. That's over 1%. That's all I'm looking for is 1% every week, consistently, predictably, and safely. All right. How much do you make per month doing what you do? I make over 1% a week. If the month has 4 weeks, that's over 4%. If the month has 5 weeks, that's over 5%. Why it dropped so much? Devon, I have absolutely no idea. All I know is it's on my list. I like Dollar General. Okay, they've been around for almost 100 years. They consistently increase their dividends. They share their profits with me and whoever buys it. Why do I care where the stock is? I honestly don't care. Or it doesn't mean that much to me. How's that? Okay, so as she drops, that's where I buy at the bottom. She goes back up, that's where I sell. I'm looking for a 1% increase. So here at $84.40, well, what's 1% of that? That's 80 cents. So as she turns around and goes back up, well, she went to 88.
Hi, I'm JC, and as you being part of my internet website club thingy, which my dad doesn't like me calling it that, but I do. Being part of that, you're gonna be as you being part of my internet website club thingy, which my dad doesn't like me calling it that, but I do. Being part of that, you're gonna be getting weekly lists of stocks that I'll be trading, and every month you'll be getting 4 lists of stocks that you can choose.
January. There's over 20 days in February. There's over 21 days in the month of March. What does that mean? That means every single day you can buy a different stock, because every single day there is a different company paying out dividends. Yeah!